Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, June 9th and Friday, June 10th, 2016. Hope you had a good trading week. It's been pretty slow. Got a couple of stocks and whatnot every day, but it wasn't very exciting overall. We've been kind of stuck in a narrow range here. So this is a preview for Thursday and Friday because we tend to not do a preview for Friday by itself because most of the week is played out. As I said last night, the key here is we're moving into the quarterly futures contract roll, which will completely slow the markets down for probably Thursday and definitely Friday as everybody moves to the September, which is the U6 contract on the futures. So there probably will not be calls in the report Friday on the stock side. We'll call it from the tape Friday morning. But if you've been through this before, you know it's usually a dead day. I will post a link to what the futures contract looks like and how it works on YouTube. We've got a video we made a while back. We can post that into the Twitter feed for you to review here shortly. Anyways, here's a look at the ES. We did climb a little bit more today. It was very lackadaisical. We are starting to print new highs. Usually this would be breakout mode, and it's a tough time for that to happen with the futures contract roll because nobody wants to step in. So hard to say. From a chart perspective, this looks very good. We've broken the risk line. We're breaking out of an inverted cup and handle or an inverted head and shoulders formation. But like I said, overall, we're not running, and I don't feel like this is the best week for this to be occurring. But certainly alongside bias at the moment until something else goes wrong. Crude oil for the day up 50 up to 51.37. That's up over $1. Gold up 18.50. The S&P cash index was only up 7. Again, that's a new closing high for the last year or so. Let's see, 21.19. Yeah, we were a little higher last May, but just barely. Look at again. Keep in mind, this was last year in the S&P. Remember how boring it was? Basically, from February when we got to 2050 all the way until August when the market finally tanked and then bounced, we were stuck in about a 75-point range on the S&P for that whole time. That was one of the most boring periods of the market I can recall. And just remember here, we got up to that same number, 2050. That's amazingly the same place here at the start of April. And we've been in that range now for the last just 2 months. So that has been a little slow. Obviously, we had a lot more money made in January, February, March, April, early April this year than the last couple of months. Now it really feels like it's slowing down. If you get a breakout and run, great. That's awesome. But if all we do is kind of sweep up to that, what was it, about 21.30 maybe was the highest close back in May of last year, and then we just stick in this range, it feels like an exact copy of last year. And of course, then you head into summer here shortly, and August is when things really picked up. We'll see what happens. It is what it is. You can't change the market. NDX also up 8. Look how flat that's been the last week. You're still stuck in this range. It is not making anywhere near new highs. The SOX, which has been moving up on its inverted head and shoulder formation breakout, was flat for the day. Biotechs down 2, which is also a blip. So there's no leadership in the tech sector. The VIX up 3 cents to 14.08. The trend closed low at 0.96. 10-day moving average is 1.04. Nasdaq volume only 1.55 billion, even though it was stronger out of the gate. Advanced decline ratio 9 plus 916 on the Nasdaq, which is positive breadth, plus 1,065 on the New York. Google closed up 1184, which is good. Apple down 9 cents, which is obviously a blip. Obviously, so many stocks just so flat all day today. Amazon up 290. Not a new closing high, still holding under that risk line from that 13 sell signal. Netflix rolled over a bit, down 3. I'll also point out Tesla real quick, another one that moves a lot because it did have a strong couple of days here. Let's take a quick look at the, now remember, we're going to watch the contract roll. So this is the M6. This is still the June contract. You see the volume. The opening candles in the mornings around 40,000 contracts. Watch how that's just a little bit lower tomorrow on Thursday, and then it falls off a cliff and everything goes to the U contract on Friday. Very important to understand that from a trading perspective. So here we are, and you can see basically inside the prior day's range. We did have a strong push in the morning and a pullback, but this is not a day where we just continue to push either direction, where you get the easy money. That's what we like to make. The easy money is always good. Here's the Nasdaq futures, 2.5 days here, basically 3 days, all right in the same area, not doing anything. Very uneventful. What do we have in terms of data still coming out for the rest of the week? Because again, we're not doing the preview on Friday, so let's talk about both days worth of data. You've got on Thursday, initial and continuing jobless claims an hour before the bell. Wholesale inventories 30 minutes in. Natty gas an hour in. On Friday at 30 minutes into the market, Michigan sentiment preliminary and Treasury budget at 2 p.m. Eastern time. Again, Friday, no calls in the report. We'll just focus on some intraday stuff for the first 90. It's usually not a great environment. Keep your size down. pay attention to what that really means to the market. You're trying to learn and grow as a trader. You have to understand these things. Showing up and treating every day equally is not a path to success. You have to understand the broader picture of what's going on in the marketplace. Charts as usual brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a good rest of your trading week.